Banks are only holding an average of $2.08 for every $1 in default, which is down from $2.78 2 years ago. Include loan modifications, and the average coverage ratio of all banks drops to $1.38. Some major institutions are even more exposed, including Bank of America, which is only holding about 99 cents for every delinquent dollar. But even this alarming figure might be wrong. In fact, banks could have a lot less in reserves than initially reported. On September 30th, the Department of Housing and Urban Development will officially end the COVID-era forbearance programs for FHA mortgages. This ends a temporary measure that has hidden the true number of delinquent loans in the U.S. housing market. For the past 5 years, loans in forbearance were not required to be reported as delinquent to credit bureaus. This created a shadow inventory of non-performing loans on banks' books. With this deadline, these loans must either be made current through a repayment plan, or they will be officially classified as delinquent. This transition will force banks to report a higher number of non-performing loans, giving a more accurate and potentially more troubling picture of the mortgage market. For traditional real estate investors, the potential flood of distressed inventory could put downward pressure on property values. Their usual acquisition strategies may not be effective for this new class of assets that will be sold outside of the MLS. But for non-performing note investors, this is the moment they've been waiting for, as banks will be under immense pressure to offload this distressed debt from their books. The influx of new assets will drive down prices and create a once-in-a-lifetime opportunity for investors to acquire distressed assets for pennies on the dollar. If you're unfamiliar with non-performing note investing, we've put together a free guide on how to navigate this sophisticated market in the bio. But two questions still remain. Do you think these financial institutions are overexposed? And is your portfolio safe from this shift? Because